Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guys show. Today, let's talk about if you are going to be stuck with a bad annuity, if you want to get out. Well, you might be, you might not be, okay? I'm going to share some stories and I'm going to show you my screen and I'm going to show you some options on how to protect yourself from this and also what will happen if you're not protected, okay? Not everything's bad, but it's just good to know, and this might help you as you kind of search for the right annuity. You want to make sure you get the right one, and I have people that ask me all the time. It's like, I really just want to make sure I make the right decision, because if I get into this and it's the wrong one, I don't want to regret it. Okay. And that's why I just try to show you everything that's there and then let you make your decision. I'll make my recommendations for sure. Like if you're looking for an annuity and you have certain goals, I will make recommendations, but I will show you everything at the same time. So if you're looking for one and you want me to help you, book a call. There's a link below this video and there's a link on my website, johnstevenson.com. And you can check out the annuity calculators there as well and find out for yourself kind of what the carriers are paying. I want you to know what your options are if you are stuck with an annuity. Okay. So anyways, all right. So I'm sharing my screen and I'm going to show you the SPIA contract first. SPIA stands for Single Premium Immediate Annuity. And I'm just throwing someone in here who lives in Maine. They're a male. They're 62. And I'm not even going to show you a joint yet, but I just want to show you the premium is $250. They're going to take immediate income. And with SPIAs, you put the money in. It is irrevocable, okay? There is no cash value. You cannot get your money back. It is one and done, okay? And that's how it works. So if you purchase one of these, you have to understand that income is guaranteed for the rest of your life, which is great, unless, of course, you do like a period certain 10 or 20, which is fine. But if you want to do a lifetime income, then it's guaranteed for life, but it's irrevocable. You can't just go back and take that money back. Like I had someone buy one of these, not for me, but from someone else, and they're like, well, I thought it was good at the time I bought it, but now rates are so much better and I wish I could get out of this and buy something else. I can get more income. I'm like, yeah, I wish you could too, but you can't. You can't. There's no cash value. You cannot reverse it. So you have to remember that. All right. I'll show you the other ones where you can, but just want you to get an idea. Okay. For this one, monthly income $1,600. It's guaranteed, irrevocable, never goes down. Okay. Very simple. Go here and I say, well, I don't want it now. I want to take it in 5 years. Okay. Then it turns into a DIA, a deferred income annuity. Okay. $2,240. Okay. That's not bad. Another $600 a month. So you just got to wait longer though to get it. So again, irrevocable, but that's how it works. Okay. So let's go to ones where you can change your mind. Okay. So I'm going to go in here and I'm going to say income rider. Income rider is a popular option for lifetime income, highest lifetime income, and you can cancel it if you want. The downside is you're going to have surrender charges. Okay. That's just what happens if you take it early, if you surrender early. If you don't surrender early, then you won't. Okay. But let's say you got into a bad one. You're like, oh man, I don't want this. This wasn't right. Okay. Well, here's what you have to remember about these. And this is the same with the SPIAs and DIAs, by the way. You'll usually have a free look period, and it's usually up to 30 days, depending on the state and the carrier. But it allows you to look at the contract and say, all right, is this what I really wanted? Do I really want this? And if you don't, you can cancel it and take your money back. But if you wait after the 30 days and you cancel it, then for this one, like with the income rider, you can cancel it, but you'll be charged surrender charges. It might be 10%. Okay. So you could do that. I actually had a client that purchased an annuity for themselves. It was the highest lifetime income annuity possible. They bought that and they bought a MIGA. And it was perfect. I mean, it was the highest income they could possibly get, which is what they wanted. And then they wanted a MIGA. And we got them both. And so they got a really high growth rate. I think the MIGA is getting like 6%. And so they're both really good. But he changed his mind. He changed his mind on the income one. And he's like, I just want to buy another MIGA. Can I get out of this? And I looked at it. I'm like, no, you can't. It's been a month. He was right. It was like right past the surrender charge period. He's like, well, I'm okay. It was my fault. I'm going to take my 20,000 hit and I'm going to buy a MIGA. I'm like, yeah, it doesn't work that way. So you could do that. You can absolutely take your money out, but then you're going to have to wait a year because a lot of these MIGA contracts, these carriers will not touch your money because they know it's surrendered funds. So they don't want you they don't want to get in trouble, okay? Because you take that money out, you lose money, and you put it in. Yeah, you can get it all back in like a year or two from the earnings, and that's what he wanted. But the problem is they won't take it he can throw it into a bonus product that will make him whole, but he wanted a MIGA. So anyways, it just wasn't he changed his mind, and if he does decide to surrender it, he's going to take that $20,000 hit, but he's not allowed to put it into a MIGA for at least a year. Some of these carriers will just not take it. So sometimes it's longer than that, depending on the carrier. So you have to be sure. When you buy these, you have to be sure. Now, he still has the best lifetime income product available to him. It's with Nationwide, and it is awesome. He's going to get a ton of pension income from it. It's just a lot of times we change our minds. That's who we are as human beings. We change our minds. So that can happen. He's still got a great product, but it's just, that's a real world example. I don't share a lot of these, but it doesn't happen very often. I had another guy, he bought an annuity and he was like, oh, you know what? I thought I wanted all this for income, but we want to do a kitchen remodel. It's going to cost us $50,000. I don't want to spend all this. I want it back and I want to buy a smaller one. So he actually surrendered it in like 2 weeks after it was issued. They sent him back the money. It didn't take very long for him to get the money. He used the money he wanted for his kitchen, and then he repurchased the same annuity contract with a smaller premium. So anyways, it's easy to get the money back regardless if you surrender early or later. It's just if you surrender early, in that free look period, you get all of it back. Okay. So, all right. So let's look at this. All right. Let's see, Montana. Just throw another example in here. 250. Okay, then we're going to do joint. Okay, and then we're going to say the plan is to take income at age 67. What's the highest payout we can get from an income rider? All right, there we go. So 26,000. It's definitely a little bit lower for joint, but it's joint. Okay, never will run out. So you look at this, and of course Nationwide's on top. They've been super competitive lately. Doesn't mean they're always going to be, but they are now. They're great. So you can see here that the 26,000 is guaranteed for life, which is why you buy it. And the account balance will run out at some point, but the income never, ever stops. Okay. Let's talk about worst case first. Let's say he buys this. You see here the rider charges. Here's the rider charges. That gives you that guaranteed growth for the benefit base right there. That's why you buy it. It gives you that high lifetime income because they're taking $437,000, multiplying it by 5.95, giving you this. But let's say during this time, the stock market is terrible and it's a full recession. And, let's say the stock market crashes 50%. Okay. His account value is at $231,000 because it's been, he's been charged these fees. And even though he could take income right now, he's like, you know what? Stock market crashed. I want to take my money out. I want to invest right into it. I don't need my income right now. I'm going to take a chance and do it. He could do that, but he's not going to get the full amount. Okay. That's the thing. Look at the surrender value over here. It's like $217. Well, no, if he waits 5 years, it's $214,000. Okay. Well, that's a hit, but he's willing to do it. Okay. He's willing to do it because he's like, oh, the stock market's going to recover. I'm going to make a ton of money, way more than my surrender charges. I'm absolutely going to do it. Maybe that's a good idea. Maybe it's not. Okay. But that's one reason why people might surrender it. Or you just might surrender it because you get terminally ill and you're like, I want to party. Or maybe you want to surrender it because you just changed your mind, period. Okay. You just have to realize that these surrender charges, you're going to get hit with them. Okay. And it's for usually a period of 10 years, depending on the contract. But you can see right here, it is 10%, 9, 8, 7, 6, 5, 4, 3, 2. Okay. If you waited 5 years, it's like 7%. Have you waited like 5 years and then the beginning of the 6th year, then he would, he'd only get charged 6%. So that's how it works. You can see the simple roll-up rate is 8%. The income base is 25%, which is why he was being charged the income rider fee, because it was giving this huge amount of growth for a huge amount of lifetime income. But sometimes we change our minds. Okay. And this wasn't necessarily a bad annuity contract. He just changed his mind. Okay. Unfortunately, there are people who are in bad annuity contracts and they call me all the time because they were sold these years ago and they can't get out, or they can, but they'll suffer a huge surrender charge. And so they don't want to get out. They're like, yeah, he put this in and it's only been averaging 3% a year and it's horrible. And I want something better. And why was I putting this in the first place? And it's usually just due to a high commission, bad product. But the problem is I was like, yeah, I can put you in something else, but you have to have a bonus in order for the carrier to take you. Okay. And it has to be with a fixed index annuity with a bonus. But the problem is if you do it with a bonus, that carrier is going to be like, all right, well, we've given you all this money at the front end, which means we're going to throttle your earnings thereafter. And usually you're making like 3% every year after that. So it's like a catch-22. It's like you want to do it and you're like, oh, I'm going to be made whole. I'm going to get this money back. But you're just putting yourself in another product that's not going to give you a lot of growth. So it's just frustrating because a lot of these people, they want to get out, but they can't, or they choose not to because they realize they're going to lose a bunch of money in the surrender charges, and they just kind of wait it out. So, but that's just how it works. So if you want to surrender it, you can. You just have to have something that has surrender charges instead of like a SPIA DIA where there's no cash value. You cannot get it back. So same with the MIGA. MIGA is a fixed rate annuity. They got surrender charges as well. So, but there are ways to get out. And sometimes those ones, even some of these fixed index annuities, will allow you to get out. If you're like terminally ill, or if you go into a long-term care center, sometimes they'll allow you to get out without any surrender charges. So, or if you die, they'll give it to your beneficiaries. So that is the ways to get out of these, and whether they're good or bad annuities. Anyways, I was kind of all over the place with this one today, but I just wanted to share real life examples and share how this works for you. And as you continue your search for annuities, I hope that you feel some transparency from myself. And hopefully as you go to my website and you check out the annuity options, that you'll be able to see some transparency there. I show everything that's available. It's all the income options, it's the fixed options. And if you want to book a call with me right there on the website, you can, and we can chat, and I'd love to help you buy an annuity. If you're looking to purchase an annuity and you don't want to go to the website and you just want to book a call, right below this video, there's a link as well. So anyways, hope this helps. I really do try to be transparent, show you everything that's available. And some of these pay me high commissions, some of them don't pay me high commissions, but at least you'll see what's there and you can make the best decision for yourself. So I appreciate you watching. I hope you enjoyed the video. If you do, like, subscribe, share, comment below if you got questions. I am truly happy to help, and we'll see you next time.